Sure, thank you. Good afternoon, everyone. Today I'm here to present Alberta's 2025-2026 second quarter fiscal update and economic statement. It should come as no surprise to anyone that we are facing serious financial challenges this year. Last year, we had a surplus and cash available to allocate to the Heritage Fund to help grow it for future generations. However, with U.S. tariffs, we knew this year would be very different. Our economy has shown some resilience, but we continue to navigate tough economic times. Oil prices have weakened, putting real pressure on Alberta's bottom line. The costs of recent collective bargaining agreements and the urgent demands of our health system are having a serious impact. As we outlined at budget, Alberta is facing a significant deficit this year. That means we'll have some tough decisions to make on the road ahead. Despite the challenges, Albertans can trust that every decision we make puts their interests first. Looking across Canada, Alberta is not alone in facing these challenges. The other provinces are also wrestling with deficits and similar economic hardships. Oil prices continued to fall through the second quarter. As of second quarter, Alberta's projected 2025-2026 deficit is $6.4 billion, holding close to the first quarter forecast. Alberta continues to face pressure from a growing population, which is projected to increase by 2.5% in the 2025 census year. To meet these pressures, we must stay disciplined and make every fiscal decision count. Tough choices do lie ahead. We will continue putting families first by prioritizing the essentials, strong health care, education, and world-class infrastructure. We're reviewing government programs to ensure they're delivered with greater efficiency, value, and impact for Albertans. Sound financial planning is what allows us to reliably provide the services Albertans depend on: healthcare, education, social supports, safe highways, and vital infrastructure. Now turning to the economic update. The current state of the economy presents both strengths and challenges. Employment is projected to rise 2.4% in 2025. We saw more jobs in the service, healthcare, and education sectors in the second quarter. Alberta's real GDP growth is expected to lead the country at 2.1%, an improvement from budget, but down significantly from last year's 3%. Oil sands companies are well positioned to weather low oil prices. Oil production has continued at record levels this year, and oil exports to Asian markets have increased significantly. Our government continues to invest in building new schools and hospitals, contributing to the growth of construction activity in the province. Overall, the unemployment rate is forecast to remain at 7.4% in 2025, with the rate projected to ease to 6.9% in 2026. Real GDP growth is expected to slide to 1.8% in 2026, as lower population growth slows consumer spending and residential construction. Outside the energy industry, economic uncertainty is pushing many businesses to delay or reduce investment plans. The agricultural and manufacturing sectors are also facing challenges due to trade conflicts. Overall, real manufacturing exports are expected to decline by about 3% this year before staging a partial recovery in 2026. We will need to take a disciplined and forward-looking approach to Alberta's finances in the years ahead. So what does this all mean for Alberta's bottom line? Revenue for 25-26 is forecast at $73 billion, down $1.2 billion from the budget. Expense for 25-26 is forecast at $79.4 billion, up $52 million from budget. As mentioned, while Alberta's projected deficit is holding relatively steady at $6.4 billion from Q1 projections, that is still a $1.2 billion increase from what was projected in budget. This is largely due to falling revenues from non-renewable resources, which are down $1.7 billion, or about a 10% drop from budget projections. Low oil prices have driven down royalties, and a stronger Canadian dollar, now forecast at 72.3 cents US compared to 69.6 at budget, means we will get less for our product overall. The light-heavy differential is forecast at 11.30 US, or $5.80 narrower than at budget. When the differential narrows like this, it helps offset weaker oil prices. We're all aware of today's low oil prices hovering around the $60 mark, I think $58.50 today. As of the second quarter, we have lowered our projected price for a barrel of West Texas Intermediate to $61.50 US per barrel, down $6.50 from budget. Personal income tax revenue is down $457 million from budget to $15 billion. Corporate income tax revenue remains steady at $7 billion. Now turning to expense. Operating expense is forecast at $65.3 billion, up $953 million. This is in large part due to compensation pressures from new contracts with public sector workers. Funding from the contingency has been directed to key initiatives that will expand surgical capacity, fund new temporary beds in continuing care, support new psychiatric beds to divert patients from emergency departments, and enhance community care access. As of the second quarter, the 25-26 capital plan has increased by $154 million because we've reprofiled unspent funds from the previous year to complete approved projects. We increased the contingency to $4 billion in budget 2025, in part to cover spending increases as collective bargaining agreements are settled. As of the second quarter, we've allocated roughly $1.7 billion of the contingency. This includes $711 million for disaster and emergency spending to fight wildfires, replant trees affected by wildfires, and for emergency evacuation payments. Another $959 million has been earmarked to cover increases not offset by dedicated revenue, such as for debt servicing costs, capital grants, and the additional cost of compensation increases. This leaves $2.3 billion unallocated of the $4 billion contingency in 25-26 to address cost pressures as required. Should a portion of the contingency remain unspent, it will be used to reduce the deficit. The challenges faced by Alberta and our economy are considerable. Falling oil prices have resulted in a significant drop in the non-renewable resource revenues that fuel our economy, and trade uncertainty creates economic uncertainty across Canada. When this government took office in 2022, the price of oil averaged more than $89 US per barrel. Now the forecast for WTI this fiscal year sits at $61.50 US, a drop of about $28 per barrel from the 22-23 fiscal year. Again, for every dollar the price of oil drops, our revenue forecast decreases by hundreds of millions of dollars. We may not be able to control external factors, but we can control our spending to protect the vital services Albertans rely on. We will continue to invest wisely, build up the Heritage Fund, and pay down debt during the good years. Then, during difficult years, such as this one, we exercise prudent financial management to ensure we support essential government services for future generations. We'll continue to remain transparent in our fiscal reporting and our plans going forward, as we always have. A report by the C.D. Howe Institute ranked Canada's federal, provincial, and territorial governments, and once again, Alberta topped the country with an A+ for budgets, estimates, and public accounts that were timely, accessible, and reliable. Every other province and territory came in below Alberta at B+ or lower. Through our policies, we will protect Alberta's economic security and ensure that Alberta remains the best place in Canada to live, work, and raise a family. Thank you. Happy to take some questions.
Thank you. That brings us to the end of the formal remarks. Now we'll move to media question and answer. We have time for one question, one follow-up. Just ask you to identify yourself and your outlet and who. And so we'll go to the first question. Yes, go ahead.
Hi, Minister Morgan Black, Global Edmonton. So you mentioned the uptick in Asian markets. Obviously, the plan of a pipeline, getting more access to those markets. With the MOU today, are you concerned that things are going to move too slowly for Alberta to capitalize further on those opportunities?
Well, I think when we're talking about our revenue today, obviously a great story today. It will mean a lot for the future of this province. It won't help us this year or help us, next year. A lot's going to depend on when there's actually shovels in the ground. The great thing that we've seen from the TMX expansion is the narrowing of the differential, which has largely offset a lot of this drop in WTI price, and that's in no part due to the pickup of Asian markets seeking that heavy oil. So it will mean a lot for us down the road. It's great news, but it won't have a lot of impact this year or likely next.
And you also mentioned tough choices ahead. Could you be more concrete on what those tough choices may be?
Well, I look at it like this. We're just getting into our real formal, budget process. We know we're in a deficit position. We know we're projecting deficits in the future as well. So I think we're going to have to continue to prioritize healthcare, education, those aren't places where you're likely to see it. Health's over their budget currently. A lot of it's volume-driven pressures, physician compensation, more surgeries and the like. So I think we'll have to continue to prioritize from within, and it'll probably mean continued cannibalization of everything else.
Thank you.
All right, next question. Okay, go ahead.
Yeah, Catherine Kowski, Alberta. So as you're trying to pay down this deficit, we're still seeing that supply glut from OPEC. We're still anticipating some of those economic headwinds globally. Are you looking at anything on the revenue side?
I would say this: nothing big, nothing dramatic on the revenue side. We have gone through a process all summer where we looked at continued revenue tweaks, updating fees that haven't been updated in 30 years and the like. But I do think that we're coming towards a revenue conversation potentially. I'll probably have more to say about that in Budget 26, but I think my goal right now is to show Albertans that we're trying to be very thoughtful with the in-year expenses, the trajectories. We're holding to the fiscal rules, staying below population growth plus inflation. But at some point, it's going to become a services, how much debt you're willing to take, how much revenue you're going to take in now and in the future. For now, this is part of the deficit cycle that we're prepared to live with because growing province. We know we can't stop building to try to keep up with that. But at some point, revenue is going to be an issue. Hopefully, the pipeline announcement today, the extra volumes in the future will help. But that's for another day.
Okay, and on that topic, there was much jubilation about the pipeline, but you also said in the past you want to reduce your reliance on oil revenues. So how is another pipeline going to help you reduce reliance on non-renewable resources?
Well, I think the Heritage Fund initiative that we started, that's the best thing I've ever been shown as a way to get Alberta off of the royalty roller coaster, as they say. But that will require a lot of patience. But the plan's well on track to meet its goals. I think the Heritage Fund's at $31.5 billion today. Oil and gas, our reliance on it, it's a great opportunity. We're very fortunate. If we didn't have it, that capacity would need to be taken up through taxes or other fees. It's in a good year we'll have $20 billion in resource revenue, and that's almost exactly mirrored by our tax advantage over the next closest province. So we want to get off the swings, and I think we're dealing with that by managing the surpluses accordingly so we can deal with the deficits, which we're in now. But we shouldn't lose sight of how awesome it is for the province.
All right, any more questions? Yes.
I wanted to ask you about something that was mentioned in the budget as part of operating expense increases. Oh, sorry, Lisa Johnson, Canadian Press. As part of operating expense increases, $953 million was listed, develop an in-province surgical voucher program. Can you tell us what that is? I don't think this has been announced yet.
There was money put aside, but I may need health to get you a more concrete answer. It had to do with increasing surgical capacity, but I can get you that, Lisa.
And I wanted to ask you too, like during the tech briefing, we heard about some of the positives that have contributed to the economy. There was talk about a lot of construction that's happening. I wonder if you could zero in on a significant factor that mean that we have a deficit shrinking slightly from the first quarter. Like, is it more exports of oil to Asian markets, or is there something you can zero in on? Why are we seeing a smaller projected deficit?
So the differential helped a great deal in Q1 as well, offsetting those things. We did see some changes in transfers that offset some of the hit at Q2 here. Largely that was prior year adjustments catching up to what Alberta's actual population was. So that helped a great deal, and then some prior year adjustments on the tax side as well.
Mm-hmm. Any more questions in the room? All right, and with that, we'll go to the phones. Operator, please put through the first caller.
Your first caller comes from the line of Jackie Carmichael from Post Media. Your line is now open.
Thank you. You said that there's some tough decisions ahead, and you also mentioned reviewing government programs. Will there be cuts to government programs in the coming year or two?
Well, I think we're definitely going to look at them. You know, that's been my commitment that we'll turn over every rock. We need to make sure that it's continues to be a priority of the province. You know, there's no way that I'm going to have the capacity to say balance this budget through cuts. I don't think that's what Alberta needs right now, but we need to ensure that we're not outliers compared to the other provinces, and we need to ensure that the things we're spending on are still the top priorities of today. And that will all manifest itself through some tough conversations, no doubt. Too early to give you a better answer than that.
Okay. The province, it was been mentioned that the province is tracking shifts in sentiment towards the oil industry. What are you hearing, and how are you addressing it?
Shift in sentiment towards the oil industry? Yeah, I'm not sure that I can answer that, but I would say, you know, we do monitor sentiment generally. We monitor the sentiment globally when it comes to oil and our forecasts. It remains a very important piece of our revenue puzzle, and I think the news today, you know, is great news for the province and the country as a whole. But yeah, Albertans need to recognize how much of it is paying the bills and know where it will come if that isn't there.
Mm-hmm. And please put through the next caller.
Your next caller comes from the line of Emmanuel Prince from Radio Canada. Your line is now open.
Hi, Minister. You're talking about the new labor deals that were made during the period that you're talking about in this update. But do you have an estimate of how much of a budget hit is going to be the new ATA contract?
Well, I won't get into the specifics of the deals, but part of the reason for having a $4 billion contingency was that unknown. So as deals become you know, ratified, that moves from the contingency portion of the budget to the actual line items, and that's what we'll continue to do throughout this year.
Any follow-up?
Yeah, and the income loss related to the income tax for individuals is kind of shored up by the investment revenue. Do you expect that the investments that you have are going to continue to be so good that they can shore up the losses in some way?
Well, I try not to take victory laps when those are good, or I try not to be too critical when they're bad either. You know, the markets have been pretty frothy, and that's driving a lot of investment income right now, and was a substantial reason to help you know, offset what this otherwise would have looked like. I think our goal is to just you know, make sure that we focus on costs when it comes to investments, and it's good news though for this second quarter update.
Okay, thank you. And with no other callers on the line, we'll give one more chance for the reporters in the room for those who haven't spoken yet. No? Okay, and with that, we'll end today's available time. If you have additional questions, please don't hesitate to reach out to me. My contact is at the bottom of the news release. Thank you. Have a good day.
Thanks, everybody.